What's up, taxpayers? There's a reason that there is a saying, nothing is certain in life but death and taxes. Taxes aren't going anywhere. But another thing that you can be certain of is that the way that you're taxed and tax laws are always going to be changing. Changes. Change can be good or bad, but it's important with that something changes, we adapt to it to put us in the best possible situation moving forward. This is your third and final installment of the tax planning series, Tax Law Changes. There are two ways that you can adapt to tax law changes. One is to react and one is to prepare. During COVID-19, there were a lot of different tax law changes that became apparent to help business owners out during those hard times. In that situation, we had to react because we weren't able to prepare for something like that. My name is Nick Hammernik with Hammernik Tax and Accounting, your tax planning specialists. Part of our job security in the tax industry is indeed tax law changes. It provides us the opportunity to advise and coach business owners on the best way to move forward when those changes happen. Typically, I preach that you should be as proactive as possible with your tax situation. But when unforeseen circumstances happen, like COVID-19, all we can do is react. Make sure that we're staying on top of the tax law and taking advantage of those laws that might benefit you and your business. If you're a small business owner that hasn't taken advantage of some of those credits and opportunities that became available because of COVID-19 or other prior tax laws that were put into place, it might not be too late. So it's important that you are able to figure out what those tax laws are and then decide if they can help your business out or not. Now let's talk about preparation. This is where we want to be proactive. Oftentimes when there's a change in Washington with the presidency, that president is going to want to change the tax laws based on what they were saying they were going to do during their campaign. So being able to prepare for that ahead of time to see what might happen in the next tax year is important to plan out because it allows you to potentially take advantage of some things in the current tax law in the current year that might not be available in the next year when those changes happen. Or it might allow you to defer doing some things into the next tax year when those changes happen that might benefit your business better in that year as opposed to doing something right now. Change is always going to happen in everything in our life. How we adapt to changes determines our future success. And in this situation, determines how much money you're keeping in your pocket as opposed to giving to the IRS. This was the third and final segment of our tax planning series. If you missed the first two episodes, you can go back on YouTube and view those as well. If you think you're ready for a discovery session to see if tax planning can impact you and your business, give us a call, shoot me an email, and we can get that going for you. If you don't think you're ready for that yet, or think it might be something that might be more apparent in the future, click the link below and get on our email list to subscribe to all the latest news and trends in the tax industry that might help out you and your business. Once again, I'm Nick Hammernik with Hammernik Tax and Accounting, your tax planning specialists.